Hey everybody, it's Norris with the Norris Group. It is Friday, July 7th, and did you hear that Redfin just launched a competitor to us, small real estate investors? That and much more as we cover the biggest headlines in real estate. Up on the radio show and the podcast this week, we've got our second show with Mike and Randy Grigg. They are with Elite Auctions, and they've been in the auction industry a really long time. And this follows up in our process of updating our entire buying systems course inside our subscription, finding out how these strategies change depending on the market you're in and technology. So this is the second show. You don't want to miss that. We talk about how auctions in the bus market do if they get busier or if they're slower, how auctions change in quadrant 4, which is where we're at now, and how technology has changed the business of auctions. That and much more. Don't miss it on the radio show and podcast. Home prices increased 6.6% in May, according to the latest home price report from CoreLogic. Mortgage rates increased, with 30-year rates now at 3.96% and 15-year rates at 3.22%. The Mortgage Bankers Association reported mortgage applications increased 1.4% last week. CoreLogic predicted home prices would increase 5.3% over the next year, but some fear affordability could get in the way. Not just for home buyers, but rents continue to rise too, causing an issue with affordability across the board. Rents have risen faster than both inflation and wages, with overall single-family rents increasing 3.1% nationwide, and rents in affordable areas increasing 4.7%. That's not good. And wages only increased 2.5%. This at a time when the Trump administration is talking about budget cuts to HUD. Where's all this affordable housing money going to come from? We just don't know. Well, the California state is thinking about that. The California Senate just passed a bill that would impose a $75 fee on documents such as deeds and notices, with a cap of around $225 per transaction. The goal? To raise money for affordable housing. They think this will raise roughly $300 million to assist in affordable housing projects. Much have stopped, and there's no funding available since redevelopment dollars have gone away over the last few years, and so there's no money for these kind of projects. So this moves on to the California Assembly, so we'll have to follow to see if it goes through and if our transactions are going to get a little bit more expensive. Most states have recovered from the recession, but some states have yet to reach pre-crash GDP levels, including Arizona, Connecticut, Mississippi, Nevada, and Wyoming. 8 states have not recovered from their job market decreases, including Wyoming, West Virginia, Connecticut, New Mexico, Mississippi, Vermont, Maine, and Alabama. And 15 states have not fully recovered in home prices. Connecticut, Nevada, Maryland, New Jersey, Rhode Island, Delaware, Arizona, Illinois, Florida, of course, New Mexico, Virginia, New Hampshire, Alabama, Maine, and New York. I don't know, I love watching listings, New York, what's that show, New York Listings, and I'm fascinated by the dollar amount and how small some of these properties are for the dollar. Whatever. California, though, not on any of those lists, so we're looking good. I thought this story was a little bit of a mistake this week because I thought the Fed, states, and local cities had really figured this one out. So the National Mortgage Servicing Association is calling on federal agencies to standardize the procedures, definitions, and best practices surrounding the treatment of vacant or abandoned residential properties. Vacant lots and houses are, of course, horrible for neighborhoods. They increase the chances of crime and graffiti and lower values. But during the downturn, cities made a pretty great sport of beefing up city staff to fine banks that were not keeping the properties well maintained. I know here in California, cities made a lot of money, and those departments were very busy charging per fine per day on some of these REO properties. And shoot, Detroit just flat out took federal dollars and tore down lots of houses all over the city. So it's interesting that this is coming up now, and the story didn't talk about why, but I guess we'll see if they decide to take it on. Jerome Powell, the Federal Reserve Governor, said taxpayers are at risk and that the current U.S. housing finance system is simply unsustainable. And the systematic risk is posed because of the heavy concentration of Fannie Mae and Freddie Mac in the mortgage market. Lawmakers have been talking about GS reform since, the meltdown. And Powell's point, however, is that the Republican-controlled Congress might not last forever, and they better get started on making these reforms while they have some momentum. And that's why this next story is a little bit weird and so much more interesting. Equifax, TransUnion, and Experian will no longer show tax liens and civil judgments on consumer profiles when the information is incomplete. That means that approximately 7% of Americans with a credit profile could get at least a 20-point bump in their FICO scores. That's good for buying a new home. And in response to the overwhelming student debt many Americans are carrying, Fannie Mae and Freddie Mac will bump the debt to income ratios from 45% to 50%, making it easier to qualify for that mortgage. So in one point you've got somebody saying this is not sustainable, and the market's saying we need to lend more housing. Some say it's too risky, but Fannie Mae's chief economist Doug Duncan, who will be at iSurvive Real Estate, disagrees. So investors, we got another competitor. Redfin now is the latest iBuyer to join the fray of a growing trend of Wall Street companies offering easy cash sales to motivated sellers, trying to fill our shoes. Well, what do they have that we don't? Well, these companies have some deep pockets, shiny brands, and of course, a lack of experience for now. News slipped out this week after Redfin filed their $100 million IPO to raise some money to do some other things, including now flipping properties. They're rolling out in the Inland Empire as well as San Diego. So yes, right here in California. And the company is said to have purchased 6 properties thus far under the name RDF Ventures. In the link to the story, and I think this is on DS News, we'll put the link in the blog. Link through to this property they had in Moreno Valley. People, they did not even stage the property for pictures. What? Lack of experience, that's what I'm saying. What do you think? Are these some serious competitors we need to worry about? I would love to hear what you have to say. If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Okay, upcoming events. We are going to be in LA July 11th, next Tuesday at a Prosperity Through Real Estate. Bruce is going to be doing a one-on-one interview with Steve Love. So if you're out in the LA area towards LAX, we'd love to see you. August 16th, 10 life-changing days for a real estate investor, and that's with the Invest Club in Orange County. September 14th, 10 life-changing days for a real estate investor with the San Jose Real Estate Investors Club. And 2 days later, we'll be doing Cashing In on a Boom. This is our one-day course up there where we'll be talking about strategies working in today's California market that will hopefully be getting you deals, and hopefully you'll be using us for lending. iSurvive Real Estate is September 22nd. We haven't officially announced, which we will next week. We are over 90% sold out. If you are interested in attending, check out the sponsors, see if you could sit at their tables, or better buy a ticket shortly. So sponsorships, we are sold out at the moment. Check in or call in if you'd like to be put on a waiting list. For more information on hard money loans, check out thenorrisgroup.com. We've got fix and flip, buy and hold, and new construction starting at just 6.9%. And yes, we are lending in the greater Sacramento area, so we'd love to do some hard money loans for you up in Sacramento. For more information on trust deed investments, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.